Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we're seeing green arrows around the world this morning after last week's corrective action was contained. Markets finally found their footing on that better-than-expected jobs report when finally good news was good news again. We've been waiting for that for some time now, Scott. And looks like the strength is continuing into this morning, even overseas.
Yes, well, I remember I was on the radio Friday and we saw the jobs print, and I'm like, what good news I think is good news. People want good news.
Right.
So they tried to sell the futures down, and then they couldn't. So on the VTF, we were talking about probably covering some shorts, looking for some longs, and it turned out to be a strong day. So it was good to see that good news is good news, and that as loud as the taper talk gets, I do think there's going to be a good push-pull between the market, the economy, where we can correct here and there, but I don't think they let things just fully fall apart. Right,
and like I said, it looks like it's continuing the strength into this morning because even overseas we're seeing.
Yeah, I think the Nikkei is up by 2.1%. China's somewhat flat, but I like both of those areas for the short term and the longer term. So if we look here at the chart of the FXI, you will see this has been a really nice pattern. I think we talked about this double bottom over the summer, this series of higher low, a break above this downtrend. Then it consolidated, you had your gap up, and now look, it's consolidated, created a nice bull flag where short term for a trade above this 40-30, I think you get continuation through December back to this 42. But you want to also take a look at the weekly chart, okay, because I've been starting to look at some weekly charts for potential plays for next year and follow through. Look at the size of this consolidation and the wedge here on the FXI. If you remember, China was a spot that took us out of the recession, so to speak, in 2009, and since then it's just been consolidating while we've been going pretty good to the upside. So here's your spot. I think if you want to throw something in the draw, throw some FXI, which is exposure to large cap China, in the draw. And as far as Japan, I know Japan's had a really big move, but overall, I still think Japan, if this is your weekly chart, okay, it's been a nice move. It was on a 2013 place to be, also in 2012. I think at some point, this could get back to up here, okay, at some point next year. So with that being said, nice consolidation here, short term above 1240. I think you see 13.5 to 14.5, and it's worthy to stay with it.
So in terms of our markets then, after the nice action that we saw on Friday, the big question is how to approach this week.
Well, this week I think you're going to want to see some commitment to Friday's move. Friday's move was good, but it was a little weird. To me, high beta was a little off. Some of the names that I've been holding, I made more money, I think, last week on the down days than I did on the strong day. So it had me scratching my head, and that's why I'm like, you know what? I'm near the highs of my year. I just want to get back to tactical, so I just cleared things out. So I'm going to be starting fresh like most people. You look here at the SPX, you will see lots of nice trends. Okay, this obviously started from the November red dog reversal, taking it all the way through. Here is your outside day in May, led to that corrective activity. Here is the head and shoulders top to that one, this false breakout. So PS, this is where we are. So if you're trading for alpha or P&L, this is what's been important. Here's your red dog reversal back in October 9th. Since then, following the 21 and the 8 day. So here we came last week after the highs put in here on that Friday, that little red dog reversal right around 1808. And then this was Friday. So with that being said, I'd like to see this 1796 hold, maybe a day or two of digestion, so we could reaccumulate some stocks that could be worthy of holding through Christmas and New Year's. And then we take out Friday's high of 1806, and then you have 1813. It could happen quicker. We could just trade above Friday's high, and then all of a sudden we hang around here. But either way, the market was buyable, as it's been buyable around the 21 day for most of 2013.
Well, let's map things out then and check the temperature of the different sectors so we can see what we're working with this week. Let's start with the Qs. We have them at highs already.
Yep, technology has been a focus. It's for the last 2 months or 2 quarters, it's almost been a leading indicator. So you look here at the Qs, this sector, just so you see relative strength-wise, it came only into the 8 day, so that's why it was something that made new highs first. It did not pull back to the 21 day. So with that being said, technology looks good, and I would look for your individual picks, which we'll go over with a lot of stuff later.
Right. And the Russell looked good as well, which we like to see. That's a healthy indicator for the market. Broke and closed above the 8-day EMA with a 0.8% gain on Friday.
Yes, and it didn't close on the highs, and there was a lot of bears over the weekend saying, oh, look at the Russell, didn't close on the highs. The Russell has been powerful at times, and other times it's just been kind of out of play. I still think
healthy action, though, what we saw on Friday, right?
It's never going to be perfect.
You're right.
And everyone's always pointing something out to try and, play their deck. So with that being said, you're right. It's definitely healthy. It's just not powerful. And you're not always going to have powerful, especially in December, when things start to slow down. So with that being said, here is your somewhat of a red dog reversal to 21-day last Thursday, your inside day. Here's where Friday's action came in. So with that being said, I would say short term, if you're looking for a trade and you want to stay with this, it's got to stay above this 112. If it stays above 112, then I think we're on pace for new highs. At some point, this trend is strong. Like, everything is in line here, so it is healthy. It's just the speed and composure changes here and there.
How about the banks? We know the banks had the best action on the prior jobs report, and now we see the XLF trying to reclaim the 8-day. What do you think about the action we're seeing in the banks?
A little better than the Russell, but wasn't as strong as, like you said, the month prior. But it's still in there, and everything's not always going to be so speedy and powerful. And if you look here at the chart of the XLF, this was that last potent bar that I think this was the 2 jobs reports ago. Then it held, gave you a nice move, pull back to the 21-day, just like the S&P. So it didn't really show relative strength from that pullback, and it bounced off it. So with that being said, you take a closer look here at the XLF, and now for this to build some commitment, you would say it's got to hold there, and I think even much more traders that are looking more short-term want to see it hold above 21.34, and then at some point, I would put a water gun to cabeza. We take out this 21.64. It might not happen before Christmas, but I think it happens in the first quarter of 2014.
How about consumer staples? We had some recent gains here in the XLP. What do you think of it now?
XLP was a spot that actually got strength on Friday. Let's see if we can get this chart to come up, and there it is. It was a little slow. I guess the ice and the weather is affecting the charts. With that said, this too, looks okay. This went briefly below the 21-day, came back above it. This actually closed near the highs of the day. You have a little pattern like this where if it starts getting above this, it should be at highs. This looks good, for a conservative area of the market that actually has some yield. If that's what you're looking for, look for some names in the consumer staples, because this trend has been strong, and at times there's actually even some trades out there in some of those names that we usually go over and off the charts or the morning call, but we'll do that a little later this week.
How about biotech? We know individual names within the group are very data-driven. They can sometimes be tricky to trade depending on what we hear about them, what's in the news, but the IBP looks like it's hanging in there.
This, just like technology, is showing the leadership. I feel like every time we check the temperature, IBBs are in there as a leading indicator, and then you have some powerful moves in the individual names, but you got to make sure that you can handle the risk in holding those, because they're very news-driven, like Brittany said, and it could be powerful to the upside or the downside. So if you don't want any of that, but you want biotech exposure, the IBBs is a good spot to be because there's no individual volatility there. So take a look. Okay, here is that chart, holding in really well. Here is that last gap, held above it, above the 21-day, showing relative strength, closed okay. So if you wanted to just be in the bio group and not in individual names, this has been a great spot to be for the majority of 2013 and showing no signs of ending anytime soon.
All right, as Scott said, coming up, we're going to go in the trenches with some individual bank names, but first a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with some individual bank names. As we talked about before, the banks didn't have as powerful of a move as they did on the last jobs report, but still some healthy action. Let's talk Citigroup first. Looks like it's trying to reclaim, it did close above the 21-day, right? But it's trying to reclaim the 8-day, so somewhat healthy.
Yes, and it all depends on your time frame. I know a week or so ago I tried to be involved for a trade to new highs and it just wasn't ready yet. But if you look at the macro chart here of Citigroup, look at the size of the move that it's had, over the last 2 years. So it does take a little bit of time to break through big time resistance. So with that being said, you take a closer look here at this upper channel, and this is when we got very excited about it. What was that, like 2 weeks or so ago? went to highs, got a little faulty. I did get stopped out of my Citigroup, but where it came back into is where it had to hold, and it did. So over the weekend, Barron's had this as one of their 10 stocks for 2014. Maybe that helps. If it, on the short-term area, could close above 52.31, maybe you get back into long versus short-term. And then at some point in 2014, I do agree with Barron's, this 53.5 will not be a problem and it won't pose some serious resistance.
And we know that you like Bank of America. Bank of America has been hovering around its 8-day, holding where it has to as well.
Yep, and this too, this actually held higher, has relative strength. If you have it in the draw, keep it in the draw. If you're looking for a new trade into the end of the year, we now have a point to reference to trade against. You look at the chart here, the chart's been unbelievable since back here, remember when we started talking about this in July around $7-8. Look at this trend. This was your last sideways consolidation before breaking out again. Now you take a close look at it, and you will see that it's holding above the 21-day. Didn't have the power that some would have wanted on Friday, but overall I think you can be long versus this 1536 if you're an active trader, and then at some point could be before Christmas, could be after Christmas, I do feel that this gets taken out. This is 1597-ish, and we will get, or we should get, a chart which I'll show you here. Let's go to the monthly chart. I'm thinking for 2014, I think this should or could get to this 20 area. Look at the 20 area. Once it gets above this, that's your next point of reference. And if the banks in the market really get frisky, 24 is a target. So keep this in the drawer. As long as this trend stays intact, which I feel it will, I think that that's what you can get for 2014.
Nice. How about Goldman Sachs? Does this look poised for a breakout for high prices anytime soon?
You know what? I actually just went to the monthly chart first, or the weekly here,
okay.
And you take a look at this chart, and I know it's been sloppy to trade lately, but it's at the upper end of this last consolidation, and it seems like if we're going to get a bank move in 2014, this should be, or could be. I keep saying it, like whatever. Anyway, with that being said, it could get close to north of 180, maybe a little bit shallow of 200. You go to the daily chart, and you will see it's been a little wishy-washy up here. The trend has been intact, with very choppy, loose, sloppy action all the way into this little false breakout here, but it did hold. So next time it gets above 170, if it does, try and stay with it, because that time, since enough people are now worn out, perhaps it stays above it. So with that being said, watch this 170 level. It's very important. It failed the last time. Next time the banks have a big move, it could give you a catalyst to get back in.
How about JP Morgan? Had a nice bounce on Friday. Will this be on your radar today for some upside follow-through?
Yeah, it's, again, I just looked at the chart, and same thing. It didn't have power Friday, but it still looks okay. JP Morgan could be a viable vehicle. I don't think you need to be in so many different bank stocks, being like 2 or 3. Here's when it broke this downtrend. It's holding, or trying to hold, the 21-day. As long as it stays above 55-ish, which is right here, I think that it's in the game for some kind of Santa Claus move. Here's where those highs are. So it just needs time. These banks don't look like in the next day or so they're just going to take off, but they have a new pivot to trade against, and I think it's worthy of some attention.
Should we be paying any more attention to Wells Fargo? Because this one had an even stronger bounce on Friday, gained 2%.
Well, this one seems to be more of the investment favorite, where it didn't get as beat up through the financial crisis, but it doesn't trade with the power when these things want to go. But here, you saw some power. So with that said, it did close near highs, and this is the old highs here in Wells Fargo. Wells Fargo rarely gets in the news, and it's one of the names I think Warren Buffett loves to own. And you have a low or higher low, another higher low, woke up on Friday. So if you're in it versus pivot, stay in it, and then see if it could finally break out above. And if one bank could break out above, usually it helps the others. Let's take a quick look at the monthly chart. The monthly chart, look where it is. Like this, as far as an investment vehicle, this did not get as hurt as the other banks, and this was a nice big level traded above here, and now it's flagging again near this could be one of the first banks to really take out even like the decade highs of the prior one. So if you've been holding through on Wells Fargo, congratulations. If you trade it from time to time, it's not as easy as some of the others.
Right. All right, well, let's do some quick hits here and talk Apple. We know 2-day pullback there on after the China mobile news. Would you say it's viable here? What level would it be?
I come in flat Apple. I actually didn't. I don't even think I touched it on Friday, the first time in a while, which was good, considering the market was up. It was down 7 points or so. So there was some frustration there. But at least our community perhaps didn't have as much as elsewhere, because on that China mobile news, we've been trained not to chase the news. On that day, I think most of us actually sold a lot into it. It might have even left my VTF. But with that being said, you've had a 2-day pullback. You look at the chart here. Now it gets interesting. You know, this was the last time it was tight, pent up. That's your 526. Gave you a really nice move. Closed red on the China deal. That gave you some clues not to be in it for Friday. And then Friday there was weakness, so you want to take a closer look here now. This is the way I'll approach it because I'm not in it right now. Here is Friday's low. It's up like $2, $3, I think, pre-market. If they take it negative and take it through Friday's high, some people might try and be short it, which I think is okay if that's what you do. I'm probably just going to avoid it and then see how it handles this 8-day moving average. Somewhere around this 555, perhaps I'll look to start looking for a divergence, and then if we can get some kind of red dog reversal, new pivot, that will get me back involved, and then at least I'll have a point of reference here. So we'll see. They might not even be able to bring it negative. Who knows? At this point, that's my plan. Then you really have bigger support here, right around 548. So you don't want to start getting too big here, just in case, considering the size of the move that it had. And then they really shake the tree up. There's your 541. But ultimately, I think traders are going to want to see it hold above 555 to keep it very strong and pent up.
All right. How about Baidu? Scott's been waiting for a breakout there. It still hasn't happened. Does it look ready?
I'm going to try and get myself to trade it again today if it tries to get above 170, because last week it was a big time frustration spot for me because it looked good and then it would fail, look good and then it would fail, and then it would look good. And what?
It would fail.
Yeah. So hopefully that doesn't happen. And there you go. Here's that chart. You know, that chart is saying, you know what, Red Dog might not have been ready yet. So here it is, and there's your points of reference. You have 170.78 right there. You have 170.43 right there. Friday's high is 170. So if it could stay above 170 for actually 15, 20 minutes, have some. Because if it goes to 173 to 175 in the next day or so, and you lost money last week, you'll probably be a little upset. So maybe not do it as big as you had, just do small and see if it works out this time.
How about over in social media? How about Yelp and hovering around its 8 and 21 day over the past few sessions?
Yeah, this one, you know, social media was a good spot to be last week. Early in the week, you had a lot of strength. And then on Friday, I know Facebook opened up and traded down, which was a little frustrating. But LinkedIn became the stock that traded through 222 and gave you a nice follow through Friday. And Yelp kind of hovered. So with that being said, it's the same type of tactical type of scenario we've been talking about for December, where stocks are taking their turns, giving you better setups. Now, if you look at the chart of Yelp, you will see that it is getting set up once again. Here was this little mini wedge that we talked about, and on the breaking to the upside. Now you've seen a little bit of commitment to it. So I would say if Yelp could start to get going again above, say, the 63.75, you know, the next resistance is up here around 66. So this will be on my radar today to see if any strengths come back, because if it's going to go, here's your inside flag. It should happen soon. If it doesn't go, then I'll just stay away.
How about Tesla? 2.2% pullback into its 21-day on Friday. Where might you be tempted to buy here?
See, this is, you know, I'm not saying the same pattern as Yelp, but it had a big day, and now it's consolidating. I know, you know, the last few days have been a little frustrating, but I think traders were just trying to get a nice move that wasn't there yet. So anyway, you look at Tesla, the composure always changes on these high beta momentum names, and this was the first trend going all the way up. Here's where it changed. Let's just fast forward to where we are now. Your lower level, small red dog reversal, that was a potent move through this downtrend, and now it's getting close. It's got to do something soon. So today, let's see what it does. Does it trade below this 136.30, which will be something you should write down? If it trades below it, comes back above it, maybe we get that little tail that could finally produce the inside day or the candle we need for this to bull flag to be complete, for then the potential to take out 144. But if it trades below this low and just continues to trickle lower, I think that more frustration will settle in, and then it negates the strength of what we saw here back last week, I think on Tuesday.
How about Amazon? It's been building a nice base above its 8-day. What list of yours would you say this is on today? Would you say this is on your B list? What do you think?
It's on the B- list.
Okay.
You know, it failed at that 400 mark, and now it's trying to hold in there. I never really have too much success with Amazon, so it's always, you know, a grade below. If there was Apple,
right,
probably my A- list. But with that said, you know, we all have to know our strengths and weaknesses, and if we look here at Amazon, you will see really nice move when it broke above this area. This area first was 373. After that, Cyber Monday or whatever that was, it failed at 400. But look what it did. It held the 8-day in stride, trying to turn up a little bit. So you have 2 points here. If it gets above 388.35, your next spot would be 390-ish, and it'll close above 390. And if I was short this thing, I'd be worried that this 400 will not become a problem. So at this point, still hovering and following the 8 and 21 day, and until that changes, I wouldn't change too much there.
So what will be your focus then as you begin the trading session today?
My focus is what I want to do for the next 2 weeks, because as of Friday, I was close to just say my highs of the trading year and started getting a little frustrated. I didn't want to overdo it. I think some people who've been overdoing it the last week or two, trying to make up or trying to just have a rock star year, they're a little frustrated. But I do think there's enough activity on these 1 to 2 day time frames where you don't have to have extensive relative risk out there. You could look for the tight setup, take your day and a half or maybe 2.5 day trade, and then move on. If you want to do it with a tier system where you're always holding something and you're swinging something, that's fine. That's Mark Sperling. You look at his virtual trading floor, you'll see him have a lot of positions. But then there's also some people that are like, okay, I got to start looking around and start positioning myself for the last 2 weeks of December, for then maybe the January effect, maybe for the dogs of the Dow situation where a lot of the stocks that nobody wants to own now or show that they own are getting unduly beat up more, so they want to start buying into that for that float up that could happen in January. So you have to figure out where you want to be. For me, I'm going to take trades, want to keep my stress level down, work on my 2014 thesis that should be coming out within the next week or so. So hopefully you look for that. And just it's December, right?
Right.
December's supposed to be family and fun and holidays. Don't overdo it, but I think there will be some setups if you're looking for alpha and cash flow.
Right, because you've said even before, a lot of traders have already made their money for the year.
Yeah, so the ones that have performed don't want to give it back. The ones that are behind the 8 ball, so to speak, just want to try and play a little catch up, so they're looking for the spots that make sense. So you have to figure out what spot are you in. Did you perform? Are you behind the 8 ball? Did you have a great trading year? Did you fight it all year with being a stubborn short? So figure out where you stand, be honest with yourself, and whatever you do, don't put yourself in a bad head to start 2014, because this year will be behind us soon, and then you want to make sure that you're moving your feet fast with 2014 with a positive head, so this way you can get where you want to go.
All right, and with that said, happy Monday, everybody. Happy trading, and have a great day.